Ajay Srivastava of Dimensions Corporate Financial Services and asked him if the present market scenario is a good place for investors to build portfolios.
In fact, unfortunately, it's changing. The scenario is changing, and the scenario looks like you almost feel as if the ground is being cut under you, because it's not about building portfolio, it's about the environment that we're operating in. Nothing seems to be conducive. You know, one thing goes well. You saw the multiplex stocks, they get butchered by some idiotic, absolute idiotic regulatory policy. You've seen the ASM impacting the mid caps. So we're not sure exactly, you know, there is no certainty of policy, there's no certainty of a regulatory mechanism to make it sure that, listen, the worst is over and we're going far. Number two is, economically, IIP data is still on a slope. It's not moving up. It's from 8%, is down to 4% this time. Now, when IIP slopes down, Anuj, there's very little case to be made that the broader market will move up in this direction. That's not going to happen. When IIP goes down, means the demand in the country has gone down, and the first people to get affected are the smaller companies, because larger companies can take a better share, cut prices and still survive. The smaller one can't. So, you know, so the case that yes, it's a good time to build a portfolio, I think is slipping under us, because the regulatory scenario, environment, economic growth, everything is kind of conspiring together to give you a feeling that, listen, it's not the worst is over. The worst can still come. June results will show some part of it. But more than that, what do you do with regulatory overhang? What do you do with the policy directions which are so ad hoc that your best planned portfolio could go haywire in 30 seconds?
Ajay, you know, there is also a rural theme playing. Most of the FMCG guys we spoke to, including a person like Godrej yesterday, Vivek Gambhir, he's more an urban supplier, but he said that the rural growth is growing faster, rural market is growing faster than urban for now. If you buy that idea, would you be buying any of the FMCG or rural-related plays?
I already hold the FMCG stocks, but I don't agree with what they're saying. What they're not saying is that they are getting market share from the smaller players. It's not demand which is driving them, and no, you don't want a Godrej or a HUL to say that listen, our competition is going down, so we are getting grab a bigger market share. Number two is, thanks to the road infrastructure, they're going deeper and deeper into the country, where the regional brands were kind of holding the fray. Now, regional brands are losing out because they're small, and their access was the bigger advantage. Their access advantage is being dissipated now. So I'm not sure I'm buying into the theory that it's the demand which is growing this HULs and others. I think the story is also partly demand, but partly access to this new market. So it's not necessarily demand. I think it's also market share which is growing for the top 4 FMCG companies.
I think one thing that this year has taught us is that if you invest in the market leaders, you will not only preserve your capital, you will grow it as well. You think that strategy will work for the rest of the year as well? I mean, not just HUL, but, you know, the Bajaj Finances of the world, Britannias of the world. Do you expect elevated levels despite steep valuations?
Well, Sonia, I certainly think. And I think the reason being, the rest of the market is still playing catch up. They are under-invested stock. Even if you look at the holdings of the stock, the shareholding pattern, you see very small amount of retail holding in those stocks. It's a mutual fund, it's a FIs, and it's a 51% global owners or the Indian owners, whatever it is. So I think if the slice of the share ownership is so small that even if you took a 10 to 20% movement from the mutual fund money into the large stocks, that causes a big rally, because there is no supply coming. There's nobody diluting in the stocks. So with limited supply and more churn, as more and more people realize that, listen, this is the only lifeline in a choppy sea. So there will be a definite move, and it's already happening. You're already seeing these prices don't correct. Day in and day out, market can go up and down, they don't correct. And I think the reason they don't correct is, one is, you saw HUL, 19% growth rate in profit. Fantastic in an environment like this. You saw Indus in 20%. So they are in the range of 19-20%. Nobody else is going to be. So demand supply of shares and the assured returns of about 18 to 20% profit growth quarter to quarter, I think will drive this market further and further up, and will become further and further skewed. People are still playing catch up, but there is a whole amount of portfolio still waiting to be churned.
If the decision is made, and if you have other states following it up, how do you approach a stock like PVR? You know, you have been, of course, a fan of the stock. You have been a fan of Ajay Bijli ever since the IPO. You know, thoughts on this? Has been a multi-bagger. But from here on, are the risks too much now? Too many now?
I think it will be struck down in the court. I don't think it's a risk. I think it's an opportunity. I think it will be struck down in the first court challenge it will get. It will be struck down because that's ridiculous. Now, where do you take it to? You go to a restaurant, you go to a hotel, you go to any establishment, you go to see a show, you go to see a play, for instance, and you are not able to buy, you will take your own food there. Now, that's ridiculous, absolutely. I don't think it will stand the legal scrutiny even 1 minute. So I believe, and we are holding on to the stock, we are adding up, in fact, the stock at this point of time. So to that extent, we are biased, okay, that this will not stand legal scrutiny.